name's James Nicholson. Welcome to my YouTube channel. Another data source is saying house prices are up again. This time they're saying for the second month in a row according to their data. Now in this video I'm going to talk about the regions that have done particularly well, the regions that have done particularly bad, including London. And we're going to talk about what the expectations are for 2024. So before we jump into that, make sure if you haven't done already that you subscribe to the channel over there and hit the bell notification. We've got new content every single day, and this content will give you an informed decision on what's happening in the housing market. Also, while you're here, make sure you smash that like button or tickle the like button. Do something with the like button over there. That's really important, and that really helps us get more views on the channel. We did 600,000 in November, which was bonkers. So give that little like button a tickle or a smash or something right now. So data's come out today from Halifax. And Halifax is one of the data sources that we like to look at. So we get regular data from Nationwide, we get regular data from Halifax, we get the land registry data, and we'll listen to any other data that's out there. So every month we're talking about what Halifax are actually saying. Now, there's one reason why I like to listen to the opinion of the lenders. Now, some of you will say that they are biased, but they can't be massively biased, because if they say, look, house prices are going to go up 10% in 24 and they go down 30%, then no one's going to take their data too seriously. Also, they've got shareholders that will be not too happy if they're putting out really, really bad information. Now, one thing that they do have is data that nobody else has. So lenders know, they have that crystal ball. They know the deals that are getting approved today, mortgage offers in principle. They know the difference in the price on those deals. So they do have a good idea, at least what the next 3 or 4 or 5 months will be like. So it is worth listening to lenders. Right now they're saying 2024, they feel will be a rocky year. They don't feel that it's going to be a crash. They feel that it'll be a rocky year, some turbulence up, some turbulence down. And the economy, as we all know, is struggling. Jobs are going to be particularly hit hard, I think, in 24. Probably not looking at many pay rises next year for a lot of people as well. So what are they saying on house price data? Well, they are saying that in November, so this is Halifax data, they're saying November was an increase of 0.5%. Not too much, it's not going up or down particularly there. But it does make a difference, right? That does make a difference if you're purchasing a property for sure. And that's where they're saying it's similar to the Nationwide data. Now they're saying on an annual basis that house prices are down, but they're saying not as much as it was. Now, what I want to really make people understand is this annual basis, this isn't the drop in total, because 2022, we had 3 consecutive months of drops. We had October, November, December, where house prices went down. Now the October and November data from 22 is off the 12-month rolling average. So we've still got that December drop, and they're saying that house prices for the year, so for 12 months, are down just 1%. Nationwide was around 1.3%. So very similar numbers from both of these lenders. And that's what we've seen. Now, it doesn't mean that the market isn't necessarily dropping, because there are deals going through today that maybe were agreed in October this year, and they won't complete till January or February. Some of them might complete in December. And so what is interesting is that I think that when we start seeing the next data, so when we see the December data next month, a lot of transactions do like to get completed before Christmas. So there's always that flurry of activity. So there's good completions in December normally, because people want to move before that Christmas period. So I think we could see a bit more of a clearer indication on where the market sits in the January data. But 1% down is not particularly great, but it's not as bad as we were thinking. A lot of doom and gloomers, YouTubers alike, were saying big drops, a crash in 23. That just hasn't happened. I'm not saying it isn't going to happen, but it hasn't happened to date. So what else are they saying? Northern Ireland is doing particularly well, or has done in the last 12 months. And from their data, they're saying in Northern Ireland, they've actually got house prices that are up 2.3%. So that's a little pocket. That means they're doing well. It doesn't mean the rest of the UK is necessarily doing well. You'll see that. We've talked about Aberdeen in yesterday's video, and Aberdeen is really been struggling since 2016, and that's because they're massively dependent on the oil industry. So if you have an area where either maybe a big government contract is won and lots of employment goes, regardless of what's happening in the rest of the UK, that little mini market could do particularly well. That's why I've invested in Doncaster, because in Doncaster they got city status, they got some big government projects going on there, and Amazon does a fair bit up there as well, although they did shut one warehouse and move people across. There's some big projects going on there, and some good investment in that city, new city, which is pretty good. So they're saying that the London market is down, and the London market is down 3.8%. Now, a lot of that is central London. The big ticket is bringing down London as a whole. So you've got Kensington and Chelsea. They were down 15%. That was early this year that we had that data. And that's because a lot of investors from China and other places, there's a lot of volatility with currencies and stuff like that. And so they were struggling. And so they just didn't invest in the UK. And that meant that money was being spent elsewhere or on different things, right? So London is down 3.8%. But the Southeast, where I've got quite a few investments, is down 5.7%. So that's interesting. We did a video again yesterday where we talked about places that have really struggled. House prices are down significantly in those areas. And Bournemouth was one, Southampton was one. These areas are in the southeast. They've been hit significantly harder than others recently. And that's interesting to see that the southeast is down. It's obvious because affordability is a lot tougher in the southeast. So anything that you need, if interest rates are particularly low, for example, then house prices can rise. But as they've gone up, affordability goes down. It's harder to buy those high-end properties. Interest rates could go up even more, but a 50 grand house isn't going to get hit as hard as a 500 grand flat down south. Now, also in the southeast, what's happened is people are now trying to return to the city. So there's more people going back into London, which is pushing up rents. Initially, for the last few years, we've had work from home. So people moved out to these coastal areas, to Hastings, to Brighton, to Southampton. And now they need to be back in London if they want to be taken seriously in their job. Work from home, while it was good, it still is a thing for some. It's less appropriate and more people are expected to be back in the office. So that's pulling people out of those southern towns that have done well and pushing them back into the main cities. So Halifax data is always interesting. It's great to see that the prices haven't particularly crashed. Remember, in real world terms, because of high inflation, the cost of a house is actually, in real cash, is cheaper, around 15% now because of the prolonged high inflation. The affordability isn't where it was, but it's improving because we've got pay rises and we've got interest rates, mortgage rates are coming down. So we're kind of having what we call a silent property crash. And that's what I would prefer. Not saying that's what's definitely going to happen next year, but I'd prefer a silent property crash than people going into negative equity. Let me know your thoughts on this data. It's always interesting. Do smash the like button or tickle it or do something with the like button at least. Comment below. Let's have a conversation on it. Check out some more content on my channel. Why don't you go and watch this video right here?